Hello and welcome back to the Dukascopy TV studio. With the second quarter of 2012 well underway, we've invited Per Strömbäck from Carnegie Asset Management to give us his predictions for the future of hedge funds. Per, thank you very much for coming into the studio today.
Thank you, Natalie.
Last year was the second worst year for hedge funds on record, with the average fund manager losing 5.25% in 2011. It's often observed that funds undergo sort of a cyclical performance with an outperformance followed by underperformance, as we can see from this chart here. Are you a little bit more optimistic then for 2012 given 2011's underperformance?
Yes, I am. We've had a good start to the year. We're up a little north of 4% looking at the HFR index. And there are many imbalances out in the market, which makes it much more interesting for hedge fund managers to create some performance here.
A survey carried out by PerTrack has suggested that investors continue to view larger hedge funds as a better, safer bet, despite the fact that smaller funds have actually been performing better. What's your response to this?
I clearly agree with that statement. What you've seen since the crisis is that hedge fund managers have been closing down because it was a very immature market where you had a lot of former investment bankers that wanted to start their own hedge funds. It worked in the beginning because it was a growing industry, but with the crisis, with the need for better regulations, you can clearly see that it was the larger players that collected most of the assets.
A recent report carried out by the Centre for Hedge Fund Research at Imperial College London has highlighted the positive impact that the hedge fund industry has on the economy broadly, given sort of greater liquidity that it brings to the market, as well as a number of other elements. With a lot of pension funds also now turning to hedge funds, do you think that the hedge fund industry will play a greater role in the future of the economy, especially given the unsteady climate at present?
The hedge fund industry is already playing a major part of developing the economy. I'd say that if formerly you had the investment banks providing the liquidity to the market, that has now been taken over by the very active and regulated hedge fund managers. Very much because also when you look at the pre-crisis situation, it was the investment banks that were, through the leverage, were creating a lot of the problems into the financial market. It's been often said that the scapegoat has been the hedge funds, which I would not agree on. It's clearly the investment banks that created the problems. And now the institutional investors are looking for performing fund managers that are having a much better risk control than we had pre-crisis levels.
Per, thank you very much for coming in today.
Thank you.
The Dukascopy TV team continues to bring you the latest analysis, reviews and updates. For now though, goodbye.